Hi, today we're going to have a look at the 2023 Leaving Cert Higher Level Final Accounts Sole Trader question. As with all question ones, we are given a trial balance and we are given some notes and we're asked to prepare a trading profit and loss account and balance sheet. So first of all, we're going to start with the notes. We'll go through each note individually, and then when we have those done, we will be able to prepare the profit and loss and balance sheet. So the first note says that stocks at cost at the end of the year were 82,600. This figure includes damaged stock which cost 5,800 but has a net realizable value of 75% of cost. So the stock that's damaged is 5,800 but has a net realizable value, or we could sell the stock for 75% of that 5,800. So stock per note one was, if we go back to the question here, the stock was 82,600. And we're going to take away the cost of the damaged stock, which is 5,800. And we're going to add the net realizable value, which is 75% of the cost of the goods, so 75% of 5,800. And we're going to add that on because they could sell it for 435, so we'll add that on. So in total, that comes to 81,150. Note 2 is about goods purchased on credit from a supplier were in transit. So these are a note on goods in transit. This comes up quite a bit. The invoice for these goods have been received and it was 15,375, which includes VAT of 23%. No record is made in the books in respect of this transaction. So usually when goods in transit comes up, it gives you the selling price and you have to get the cost price of the goods. Here it actually gives us the VAT element, and that has never come up before on this, so it's slightly different than how it's usually asked. So for this one here, the accounts that are going to be affected are going to be purchases, creditors, closing stock, and VAT. So closing stock, we start off with closing stock. So the closing stock per note 1 was 81,150. And then we're going to add the goods in transit. So before we do that, we'll just do a quick note or an aside here. So the invoice for these goods was 15,375. That includes VAT of 23%. So that is 123%. That is the total, which includes the VAT. So the 15,375 is after VAT. So if we want to get the price before VAT, we want to get 100%, we get 15,375 divided by 123, will give you 1%, and multiply by 100, will give me 100%. So the before VAT price is 12,500. And then the VAT is obviously going to be the difference, which is 2,875. So stock is always valued at the cost price, okay, so that'll be before the VAT. So and again, these are goods in transit. So these are goods that we purchased before the year end that haven't arrived. Okay. So because we purchased them before the year end, they should be included in stock, and they'll be included in stock at the before VAT price, or the cost price. So that is going to be 12,500. So we're going to add 12,500 to stock because we bought them before the year end. They should be included in stock. And I think that is the last time we have an adjustment to stock. So closing stock will always be in cost of sales in the P&L and the current asset in the balance sheet. So when we're finished with the figures, I'll write here where they go. Creditors. Again, creditors from the trial balance. If we go back to the trial balance, we can see the creditors are 98,600. And we're going to add the goods in transit. So the creditors are people that we owe money to. We bought the goods off them, and the total cost of the goods, including the VAT, is 15,375. So we owe creditors 15,375. So I'm going to have to add that on. Purchases, again, you purchase at the cost price and sell it at the selling price. And again, because we purchased before the year end. They should be included in purchases. So we're going to have to add the purchases, and we'll do it at the before VAT price. And purchases in the trial balance are 1,193,500. So 1,193,500. And again, we're going to add the goods in transit, 12,500, because we purchased them before the year end, so they should be included here. And again, you purchased them at the before VAT price. And then VAT. So VAT in the trial balance is 11,900 for liability. Note the liability because it's on the right hand side. So VAT is 11,900. And the VAT on purchases, you pay VAT on sales and you reclaim VAT on purchases. So that's going to reduce my liability because I can look for the VAT back on purchases or reclaim it. So I'm going to take away the VAT element of 2875, which means my VAT liability is now 9025. And there's no more adjustments to VAT. So that VAT liability will go in as a liability less than 1 year in the balance sheet. Note number 3. This is a very common note that comes up, and it's about buying and selling a van. Okay, there's usually 6 notes you have to do to cover this note 3 in total. So it says the rate of VAT is 20%, and it's from the date of purchase to the date of sale. Sometimes in the newer questions they say you charge a full year's depreciation in the year of acquisition and none in the year of disposal, which is slightly different. But here it's just from the date of purchase to the date of sale. The old van cost 35. I bought that in 2018, and we're selling that now, and we're buying a van for 80,000, which we bought on the 30th of the 9th, 2022, which is this year. We're doing the accounts of 2022. We got 3,000, the allowance of 3,000 was given off the old van, and the net amount of the transaction was incorrectly included in purchases. And it shouldn't be included in purchases because it's a fixed asset. We're not buying it to resell it, so it shouldn't be in purchases. It should be a fixed asset. So to start off here with this note, our first 2 notes are going to be on the old van, because I need to see what the depreciation on the old van was, and that will help me find out whether I made a profit or loss in the van. We need to know whether we made a profit or loss when we dispose of the old van. So to work out the depreciation of the old van, how long do we have the old van for? Well, I think the easiest way to work this out is to see how many full years we had it for. So we had it for all of 19, 20 and 21, which is 3 full years. We had it for 6 months in the year we bought it and 9 months in the year we sold it. So 6 and 9 is 15. So we had it for 3 full years and then 15 months, which is 4 years and 3 months. And the cost of that van was 35,000. So it's 35,000. The rate of depreciation is 20%, which is 7,000. And then for 4 years, it'll be just 7,000 by 4. And then to work out the 3 months part, well, if it's 7,000 for the year, depreciation 7,000 for the year, if I divide that by 12, it'll give me 1 month, and multiply by 3 will give me 3 months. So the total depreciation was 29,750. Now to work out the profit or loss in the old van. So the old van cost 35,000. The depreciation we're after working out was 29,750. So the net book value, or what it's worth, is going to be 5,250. So how much? So we think it was worth 5,250. We only got an allowance of 3,000. So because the allowance was less than what it was worth, it's going to be a loss. If the allowance was more than what we thought it was worth, it would be a profit. And because it's a loss and the sale of a van, that goes in selling and distribution expenses in the profit and loss. If it was a profit, it would go in operating income in the profit and loss. That's the first 2 notes done. The third note is just cost of delivery of vans. This is a very straightforward note. The cost of the vans from the trial balance is 480,000. And then I'm going to take away the cost of the van we sold, which was 35,000. And I'm going to add the cost of the van. So take away the cost of the van we sold, which is 35,000, and add the cost of the van which we bought is 80,000. So the cost of vans in total is 525,000, and that's the figure that's going to go in the fixed asset note in the balance sheet. Now we need to work out the depreciation. So that's the third note done as cost of vans. The next two notes are to do with depreciation. We need to work out the depreciation of vans for the year and then the accumulated depreciation of vans. So after how many months did the buying and selling of the van take place? It took place after 9 months. So for the first 9 months, the cost was the same as it is in the trial balance. Then we bought a van and sold a van. And for the next 3 months, the cost would have changed. So we can see here the cost at the start, and again, that's why I do this note first. For the trial balance is 480,000. The rate of depreciation is 20%. And then for 9 months, I multiply by 9 over 12. Then we sold a van and bought a van, and the cost for the next 3 months was 525,000. So to work out the depreciation here is 525 by 20% by 3 over 12. So in total, the depreciation of vans for the year comes to 98,250. The accumulated depreciation of vans. So again, I'm going to start off with the accumulated depreciation of vans from the trial balance. So if I go to vans here, accumulated depreciation at 70,000. But that doesn't include the notes. So I need to add in the depreciation for vans for this year. Okay, because the notes are additional. So the trial balance figure doesn't include this year's depreciation of vans. But I have to also take out the depreciation of the van that we sold, because we don't have that van anymore. So the depreciation has to be taken out. And we have this working done up here already. So if I go to my first working here on the depreciation of the old van, that's 29,750, and you could take that out because we don't have that van anymore. So in total, my accumulated depreciation of vans is 138,500. And that would also go in the fixed asset note in the balance sheet. And then purchases, because remember it said that it was treated as a purchase of trading stock. It shouldn't be included in purchases, so I need to take it out, and it's the net amount needs to be taken out. But first of all, I have to get my most up-to-date purchases figure. If I hadn't made any changes, I'd take it from the trial balance, but there has been changes to purchases. So my purchases figure from above is 1206000, and I need to take out the net amount of the transaction. Well, the new van was 80,000 and I'm getting 3,000 off. So what I would have paid would have been 77,000. And that needs to be taken out of purchases because it shouldn't have been put in there. So now purchases is 1129000. So when you're doing that note about buying and selling the van, there's usually 6 notes you have to do to cover it. Suspense. So again, this is a common note. Suspense arises as a result of an incorrect figure for mortgage interest, okay, although the correct figure is entered in bank, and this kind of and separated. The second thing is there was a discount received of 600 entered only in the discount account. So the first thing we're going to do is have a look at the mortgage interest part of it. And again, in this question, it's slightly trickier than it usually is. So anyway, what mortgage interest has been paid? Because it says here that the mortgage interest is incorrect. So mortgage interest for 4 months. So that 2,300 is wrong. Okay, so I need to work out my mortgage interest for the first 4 months. That's the first thing anyway. Then the mortgage changes after 5 months because it changed on the 1st to the 6th. If it changed after 4 months, it would be easy. I just do 4 months and then I'd work out the next 8 months to give me for the year, because you're going to need mortgage interest due anyway, so you may as well do it all here. But it's slightly trickier here because I have to work it out for the first 4 months, and then I'm going to have to work it out for 1 more month, the 5th month, and then after that it's going to change again for the next 7 months. Okay, so we'll have a look at how that's going to work. So mortgage interest, the first thing is for the first 4 months anyway. And again, just have a look at the trial balance here. It increases by 50 grand at the start of June, and at the end of the year is 320. So for the first 5 months, it would have been the 320 minus 50, it would have been 270 for the first 5 months. And I need to work out the first 4 months because I know that that's wrong. And then I have to work out 1 more month at the 270. So for the 4 months, it's 270,000 by 3% by 4/12. Then for the next 1 month, again, it's 270,000 by 3% by 1/12. And then after 5 months, it went up to 320,000 by 3% by 7/12. Now for the suspense, I really only need this 2,700, but as I said, you're going to need the rest of these figures here because these next 8 months here are still owed. Okay, I still have to pay those, so they're going to be a liability less than 1 year on the balance sheet. And then the total amount here usually goes in as taken away at the bottom of the P&L. Now, I haven't written that here at the moment because I think there's a further change later on in the question. So the mortgage interest per above, and again, it's going to change it to 4 months. So the mortgage interest, so what should it be for the first 4 months? It should be 2,700. We're after working that out. What is it in the trial balance? The mortgage interest for the first 4 months is 2,300. So the error is the difference, which is 400 euros. Now we need to figure out whether we add that 400 euro to salaries and general expenses, including suspense, or take it away. And again, because this is a suspense note, where is suspense in this question? It's usually included in another account, salaries and general expenses. Sometimes it may be advertising. It could be any account. So here it's salaries and general expenses. And I have seen in one question, maybe it was a mock, where it has an account of its own suspense. But it doesn't really matter. Wherever suspense is, that's the account we'll be using. So I'm going to set up my T accounts. So the first thing I'm going to have is mortgage interest 4 months. And these are the trial balance figures in red. And again, my second account is salaries and general expenses because that's where suspense is. Now, this 2,300, that should be 2,700. So to get 2,300 to 2,700, I'm going to put 400 euro here because that now adds up to 2,700. And then whatever side the 400 is, it's going to go on the opposite side of suspense. If I work this out for the first 4 months and it should have been, let's say, 2,000, then to get this to 2,000, I put 300 here to bring it back down to 2,000, and the 300 will go on the opposite side of suspense. And that's the first part of the note done. And the second part of the note is about a discount received, 600 entered only in the discount account. So the way I'd usually approach this is I'd figure out what two accounts are affected. So if the discount received, you receive a discount from creditors because you purchase stuff from creditors and they will give you a discount. So discount received and creditors are going to be my two accounts first of all. So I just set those up. Discount and creditors, they're the two accounts. And again, the trial balance figures in red are the most up-to-date figures in red. Then it says I'd kind of highlight what should have happened. So if the discount received, I would put it on the right-hand side of the discount account because it's income. And I would put it on the debit side or the left-hand side of creditors because I would owe creditors less. So this would be income, so it would go on the right-hand side here. And creditors have a credit balance because we owe them that. So if we received a discount, it would go on the opposite side. So in grey here is what should have happened. Then I see which account they did put it in because I won't have to make any changes to that. So it was entered only in the discount account. The 600 was entered only in the discount account. So it was entered in the discount account. That's fine. It obviously wasn't entered in creditors. So I need to put it where it's supposed to go in creditors. And then I was going to put it on the opposite side of suspense here. Okay, so that's all the T accounts done. So to fill in all the notes now, with the mortgage, I don't need to do anything with the mortgage because we've worked out the correct figures here and we've used those. With the salaries and general expenses, from the trial balance, it was 136,400. And because the 400 and the 600 are on the opposite side, I'm going to take those away. So the discount of 600, I'm going to subtract because it's on the opposite side to the 136,400. And the same with the mortgage interest of 400. I'll subtract both of those. And now my salaries and general expenses figure is 135,400. And that figure is going to go as an admin expense in the profit and loss. It was entered correctly in discount. I don't need to do anything there. There's no changes there. And with the creditors, I'm going to subtract the 600 because it's the opposite side of the creditors balance. So the creditors balance is 113,975, and again, if there's no changes made, I'd use the trial balance figure. If there is, you use the most up-to-date figure, and I'm going to subtract the €600 because that adjustment is on the opposite side. So now creditors come to 113,375, and that's the final adjustment on creditors. So creditors will obviously go in liabilities less than 1 year in the balance sheet. The next question is to do with patents which include 2 months investment income are to be written off over 10 years commencing in 2020. Again, this is a common note that comes up, but we just need to be careful with this one because usually to start writing them off in the current year, so like usually it would say written off over 10 years commencing in 2022, okay? But in this one here, it's written off in 2020, so we just need to be careful of that, and we see that when we go through the note. Again, with the patents, with the investment income, it's similar to the mortgage interest above. I need to work out the 2 months, but I may as well work out the rest of the year anyway because I'm going to need that figure later on because the investment income due will be good, it'll be a current asset in the balance sheet. So with the investments, if you go over to the trial balance, have a look at the investments. And again, where are my investments in the trial balance? So there are 4% investments acquired on the 1st of the 7th. So I had the investments for 6 months. I got them the 1st of July. So for 6 months I had them. So 2 months were included in patents. So I need to work out those 2 months, and then I'll work out the rest of the year, which is going to be 4 months because I only had them for 6 months in total. So my note here, investments, is going to be 2 months and 4 months. So the 2 months is going to be, the investments are 180,000. I'm going to multiply that by 4%, that's the interest, and then by 2 over 12, and then 180,000 by 4% by 4 over 12, which gives me total investment income of 3,600. Okay, now usually when you do this question, there's not investment income received in the trial balance, but here there is. It says we actually have received 2,200 in investment income, which is not the way it's usually asked. Usually we don't have any investment income received in the trial balance, so that would have been a change last year. But how do you account for that? Well, the investment income due, okay, for the 4 months here, it should be a 4, because we've received the first 2 months. So we are saying here we've received those first 2 months, we're including patents. We actually have those, and we'll sort it out in a minute. How much are we still due? We reckon we're still due 2,400. Then in the trial balance, it tells us that we received 2,200 of that. So all that we're still owed is €200. So I'm going to have a current asset. I'm going to have investment income due of €200. Now, the patents, this 2 months was included in investment income. So that 1,200 investment income was included in patents, so it needs to be taken out because it shouldn't be in patents. Because patents are an asset that have a debit balance, investment income is income that has a credit balance. So that 1,200 would have been put on the credit side of patents, which would have brought patents down. So when you take it out, it's actually going to increase patents. Okay, so from the trial balance, patents is 48,800, but that includes a credit balance of €1,200. So if I take out the credit balance of €1,200, this balance here is going to go up. Okay, so the 48,800 is what it is in the trial balance. And then we're going to add the 2 months investment income error for the reasons I said a minute ago. And that means my patents is now 50,000. So to work out the patents written off, again in the question, it says that the patents are written off over 10 years. So what we would have usually done is just divided by 10. But here it says it started in 2020. So 2020 and 2021 are already done. So of those 10 years, 2 years are already written off. So that just leaves us with 8 years left. So at the moment they're 50,000 and they're written off over just 8 years left to write off. So that's going to be 6,250. So that's going to be an admin expense in the P&L, patents written off. So the patents for above, when I corrected the error with the investment income, patents were 50,000. Now I have to take away the patent written off of 6250, which is going to leave me with my balance sheet figure for patents, which is an intangible asset of 43,750. Note 6. Goods taken by Leahy for his own use were not recorded. These goods had a retail value of 3,600, which is cost plus 20%. Okay, so these goods were for his own use, so they should be included in drawings. Okay, so when goods are used for their own use, you take it out of purchases because they're not a company's purchases, and you add it to drawings. But we'll do that at cost price, not at the selling price here, the cost plus 20%. So again, just a little note here. The selling price is 3,600. Then the cost price, and that's 120%, so the cost price will be 3,600 divided by 120 multiplied by 100 is 3,000. Okay, and because they're for his own use, you just take them from purchases and you add it to drawings, because drawings is stuff that the owner takes out for personal use. So now again, I need the most up-to-date purchases figure, which is 1129000, and we're taking out the cost price of the goods, which is 3,000, because they are not a company's purchases, they're for himself. So purchases is now 1126000, and that's our final adjustment to purchases, and that goes in cost of sales in the P&L as it always does. Drawings. So from the trial balance, drawings is 45,000, and then they have taken out that shouldn't be mortgage, it should be just the goods. So the goods are again 3,000. So now if I add that in, that just comes to 48,000. And again, there's another adjustment to drawings later on, so I won't write where that goes just yet. The next thing is the revaluation. So with the revaluation, you just need to be careful of the date. Is it revalued at the start of the year or at the end of the year? If it's revalued at the start of the year, you don't add in the depreciation for the year. If it's revalued at the end of the year, you do add in the depreciation for the year. So the revalued land and buildings to 950,000 at the start of the year. The land element is 200,000 to tell us that, because you don't depreciate the land. And buildings are depreciated at a rate of 2% of cost. So the first thing we're doing this, the first thing we always do is to work out the depreciation of buildings. So buildings at the end of the year were 950,000. Okay, and they're depreciated at the end of the year, and the cost at the end of the year was 950,000. But of that, 200,000 was land. Okay, so the 950 minus the 200,000 is 750. The depreciation rate is 2%. So 750,000 by 2% is 15,000, and that is going to be an admin expense for the in the P&L, depreciation of buildings for the year. So the revaluation reserve. So when doing the revaluation reserve, I just get the new cost minus the old cost. So as we've seen, we're revalued to 950. They were in the trial balance 850. So 950 minus 850 is obviously 100,000. The depreciation for the year, I'm not going to add, because it was revalued at the start of the year. If it was revalued at the end of the year, I would add in the 15,000. Okay, but I don't here. And then I'm going to add in the accumulated depreciation of buildings. So you see here, the accumulated depreciation of land and buildings is 105. And then the total of those comes to 205,000, and that is going to go in the revaluation reserve, which is in the financed by section at the bottom of the balance sheet. The next note, again, it's a common one. There's only 2 adjustments here. Sometimes there might be 3 or 4 adjustments on this bank reconciliation. So basically what's going on here is that we think we have a bank balance of 53,000, an overdraft, it's because on the right hand side, we think we have a bank overdraft of 53,600. We get a statement and the statement says it's an overdraft of 50,300. And there's a couple of adjustments here. Neither of those figures are right. We need to do a bank reconciliation. Usually there's one adjustment that is about a check that has not been presented. So if the check has not been presented, we know about it because we wrote that check, but it hasn't been cashed yet, so it won't have hit the bank statement. So that actually, we don't really have to do anything for that, but it will help us figure out the correct bank figure, okay? And then the rest of the adjustments, usually we have to take account for. So just to show that with the reconciliation, if you get the balance per the statement, so per the statement, it is 50,300. So this is just a little reconciliation. This won't really affect our figures. So 50,300 is what it is per the statement. And then if you add the outstanding check, because it's an overdraft of 50,300, when the director cashes that check of 1,800, the overdraft is going to go up by 1,800. So I'm going to add on 1,800 here. And that gives me 52,100. So I'd usually start off with that, and then I would look at the rest of the adjustments, and at least we know then when we are finished with our bank adjustments, our figure should be 52,100 also. Okay, there's only one more adjustment here, but sometimes there might be 2 or 3 more. This adjustment then that we have to account for is a credit transfer of 1,500 has been received in respect of a debt of 1,700 previously written off. So we wrote off a bad debt before, now we're getting the money back. We've got 1,500 and the total amount is 1,700, and it's going to give us the rest of it, the other 200, in the next 2 months. And we have to account for that. So we received 1,500. The total amount was 1,700. So we're obviously owed another 200 euros. So the bank overdraft, to start off with the bank overdraft. So from the trial balance, we said the bank overdraft is 53,600. And we have received 1,500. So if we receive 1,500, it's going to reduce our overdraft. So my bank overdraft is going to go down. And again, you can see that that's 52,100, and these 2 figures are reconciled or are the same. And again, if there's 2 or 3 changes, we have to make more adjustments, and at least then you'd know that it should be 52,100. Debtors, so the debtors figure from the trial balance is 67,700. Just to double check here, debtors 67,700. And we're still owed 200. Okay, so that's I'm gonna add that to my debtors because that person still owes us 200. So in total, my debtors are now 67,900, and debtors will always be a current asset in the balance sheet. And I had written off the full 1,700 euro before. Now I'm getting it all back. I got 1,500. I'm owed another 200. I'm getting the whole 1,700 back. So that 1,700 is what's called a bad debt recovered, and that's going to go in operating income in the P&L. Now, onto the last note here. Provision should be made for the following: investment income due and mortgage interest due. So we actually have both of these done above the investment income due. We've done here with the patents, and the mortgage interest due we have done with the suspense. But in brackets here, it says 20% of the mortgage for the year refers to the private section of the building. So similar to the purchases of goods earlier, we have to work out 20% of the mortgage and take it away from mortgage and add it to drawings because it was for his own personal use. So the mortgage, what is my most up-to-date mortgage figure for the year? And again, I've worked it out earlier, and when I was working it out, I said I wouldn't write where it goes because it'll change later on. So the mortgage interest is 8,975, but they're now saying 20% of that is to do with drawings. So I need to work out 20% of it and take it away, which just comes to 7,180. And now drawings, I've had to change the drawings up here already also. So if I go back up to drawings, is 48,000. This was my up-to-date figure. And again, I'm going to have to add in the 1795 because that was for his own personal use. It's going to increase drawings, and drawings are now 49,795. And drawings will go in the finance by section in the balance sheet. Provision for bad debts should be adjusted to 6% of debtors. So the bad debt provision should be 6% of debtors. So I need to get my debtors figure. And again, I'm going to get my most recent debtors figure. So if I work my way back up, debtors finished up at 67,900 and the provision should be 6%. So 6% of debtors is the bad debt provision should be 4074. Now, what is in the trial balance? At the moment, it's 2,100. Okay, so at the moment, it's 2,100. It should be 4174. So I'm going to have to increase it by 1974. And because I'm increasing it to get out to what it should be, it's bad. It's going to be a selling and distribution expense in the P&L. If it was a decrease in the bad debt provision, so let's say it was 5,000 and I'm bringing it down to 4074. So if the difference was 900 and something, and it was a decrease, then if it's a decrease in the bad debt provision, it goes in operating income in the P&L. And equipment is depreciated 10% of cost. Okay, so my equipment, I need to depreciate at 10% of cost. So the cost of equipment is 153,500, and there's been no changes to equipment. So the cost of equipment is 153,500. The depreciation rate is 10%. So that works out to be 15,350, and depreciation of equipment is an admin expense in the P&L. And well, I may as well do accumulated depreciation of equipment here. So the accumulated depreciation of equipment from the trial balance, there is no accumulated depreciation of equipment in the trial balance, okay? Because you see here, equipment, there's no accumulated depreciation. Underneath, that's going to be 0. And the depreciation for this year is 15,350. So again, they're going to total 15,350. Obviously, if there was accumulated depreciation at the start, I would add it on to this year's depreciation. And they are my notes completed. Now I just have to do my accounts. So to start off, we're going to start off with the profit and loss account. So you can see here, I've written here, TB means the figure is coming straight from the trial balance, or if there's been a change to the figure, I've written what note it's coming from. And again, these figures in red here is just the marking scheme. So sales, sales, there's been no change to sales in this question. A lot of time there would be a change to sales, but there hasn't been here. So sales are 1,848,900. And obviously, if there's been no change at a figure, you take the figure from the trial balance. If there is a change, you take it from the notes, and it's the most recent or up-to-date figure. So you'll be starting at the bottom of your notes and working your way back up to get the figure. Again, opening stock will never change. Okay, so that's always going to be from the trial balance. So the opening stock in this question is stock of the first 70,700. And again, that will never change because that's based on the final closing stock of last year's accounts, which have been signed off. So the opening stock should never change. Purchases I'm going to get from note 6. Okay, so if I go down to note 6, that's my most recent purchase figure, 1126000. So I get opening stock plus purchases gives me that. And again, I'm going to take away closing stock. And again, closing stock is from note 2. So if I go back up to note 2 here, my closing stock is 93650. So that figure less closing stock gives me 1103050, and then my sales less my cost of sales gives me my gross profit. Now I'm going to add any operating income. So the operating income I have is of a discount received. That's coming from the trial balance. So discount here, if I go to my discount, 7,700, I know it's income because it's on the credit side or right hand side. If it was on the left hand side, it'd be an expense, but it's an income 7,700. And then there was a bad debt recovered. One of the last notes we did, bad debt recovered. I'm pretty sure the figure was €1,700. Bad debt recovered, €1,700. That's operating income as well. That's good. So if I add the two of those, they're my two incomes. And that comes to 755,250. Other stuff that could go here would be a profit on sale of van, which didn't happen in this question, and a decrease in the bad debt provision, which didn't happen in this question. But they are other items that may go there. Our expenses then. So depreciation of land and buildings. Okay, that was, we worked that out in the revaluation note 7. So depreciation of land and buildings is 15,000. Patents written off is an admin expense. So the patents written off, that is 6250. That's coming from there. The depreciation of equipment is one of the last notes we did. So depreciation of equipment 15,350. Rates is just coming from the trial balance. There's been no change to rates, but rates is an admin expense of 42,800. Salaries and general expenses, that's the note for Suspense. Suspense was included in salaries and general expenses. So when we worked that out and took out the Suspense, we had a figure for salaries and general expenses of 135,400. So there are my admin expenses. So if I add those up, they come to 214,800. Selling and distribution expenses, stuff to do with sales or distribution. So advertising is to do with sales. Obviously, that's my first one. There's been no change to advertising in this question. So that's coming from the P&L, sorry, from the trial balance. So that is 16,000. The note about buying and selling the van. So there was a loss in this question on the sale of van. So the profit or loss in the sale of van. So this was a loss of 2250. There was an increase in the bad debt provision. So that's one of the last notes we did, the bad debt provision, the 6%. And we had to see whether it was an increase or a decrease. There's an increase here, which is bad. It's an expense of 1974. And again, the depreciation of delivery vans, we worked out in the note of buying and selling the van. So the depreciation of vans for the year is 98,250. So in total, my selling and distribution expenses come to 118,474. And then if I add my admin and my selling and distribution expenses, give me total expenses of 333,274. So obviously I'm going to get my profit, my gross profit from above and added operating income. And from that, I'm going to subtract my expenses, which gives me an operating profit of 421,976. To that, I'm going to add my investment income, which is from note 5. So the investment income for the year goes in here, the full amount, whatever we had. I think it was for 6 months in this question or however long you had them. So the investment income, that was in the patents note. So investment income, 3,600, that's good. I'm going to add that on. That's money that we got for investments. And then I'm going to take away my mortgage interest. And the mortgage interest note, I had to change again down the bottom for the drawings. I took away the drawings. So when I did that, my mortgage interest was 7,180. So I'm going to subtract my mortgage interest because it's bad, money we paid out. And that gives me a net profit for the year of 418,396. And that's my profit and loss complete. Now the balance sheet. My cost of land and buildings, I'm going to get from note 7. Okay, because it was the land and buildings were revalued. So they're obviously going to be what they are at the end of the year after they revalued them. Okay, so the land and buildings, they were revalued, see here, to 950,000. Okay, so whatever they're revalued to, that's going to be the cost because they're revalued to 950,000. The accumulated depreciation of land and buildings, because they were revalued at the start of the year, Okay, the depreciation for the year will go in here. If they were valued at the end of the year, the depreciation would not go in here. So they were valued at the start of the year, so the depreciation of land and buildings will go in here of 15,000. And then the cost less depreciation will be net book value. Delivery vans, the cost, I'm just going to get that from, remember we bought and sold the van. So the cost of delivery vans we've done here, 525000. And again, in the same note, we worked out the depreciation and the accumulated depreciation of vans. That's what I'm looking for here, is 138,500. So the cost minus the accumulated depreciation is a net book value again. And with office equipment, we can see here that the cost of office equipment is 153,500. And again, there was a very last note was the accumulated depreciation of office equipment, 15,350, and then subtract gives me a net book value. And again, it's going to add these down. So tangible fixed assets is my next heading, and all it's going to go in here are the patents. And the patents, we've done a note on patents. We got the patents and took away the patents amortized or written off. So patents less the patents written off are 43,750, and the investments according to the trial balance, there's no change to the actual investments themselves of 180,000. So they are going to be 180,000. So my total fixed assets, I'm going to add up my tangibles, my intangibles, and my financials. The total fixed assets comes to 1,683,400. Next thing are current assets. So my current assets, first thing in current assets anyway will always be closing stock. And again, that's from note 2, and we've already put that in cost of sales in the P&L, 93650. My debtors less the provision. So again, that was one of my last notes to work out the bad debt provision. So I can see if I go down to that, the debtors were 67,900, and I'm going to take away the provision of, we worked out the provision it should be 4074. So the increase or decrease goes in the P&L, but what it should be goes here in the balance sheet, 4074, and that's going to reduce my debtors. So they come to 63,826, and then the investment income due, we worked that out. We worked out our investment income, and then we got some of it in the P&L. So the investment income, the small bit that was still due, that €200 is a current asset. So in total, my current assets come to 157,676. Now, my creditors amounts due within 1 year. So these are my current liabilities. They used to be called now creditors due within 1 year. The first figure that's going to go here are creditors. That's coming from note 4. There are a few changes to creditors, I think, but the last change was in note 4. So 113375 is my creditors. VAT, there was a change to VAT at the start here, the purchases, the goods in transit. So the VAT figure, and again, it's a liability of 9025. PAY, PRSI, USC is a liability. There's been no change to that, so it's going to come straight from the trial balance, 4,700. And the bank overdraft, I'm going to get that figure from the bank reconciliation note. So the bank overdraft is 52,100. And then the mortgage interest due, again, we did the note on the mortgage interest when we did suspense. So the mortgage interest due is going to be the 1 month plus the 7 months, because we got the 2,700 and then we're due the other 8 months in total. So that comes to 6,275. So my total creditors due within 1 year is 1,85475. So my working capital is my current assets minus my creditors due within 1 year. That comes to minus 27,799, and then I'm going to add that to my total fixed assets above. Obviously it's a minus here, I'm going to subtract it, but yeah, whatever the sign is, you just work it that way. If that was a plus figure, you'd add it on, so minus, you take it away. And that gives me total net assets of 1,655,601. Now I just have to finish up my balance sheet to make sure it balances. So I've creditors. So the first thing is finance by creditors due after 1 year, which will always be your mortgage, or if it's a company you're doing, it'll be your debentures. So here's my mortgage, and my mortgage at the end of the year was 320,000. Then capital and reserves is the next heading. The first thing is capital. So again, capital in the question, and again, there's been no change to capital. So capital is 762,000, and that's coming from the trial balance. My revaluation reserve is added in here, and again, we have a note done on revaluation reserve, 205,000. And then I'm going to add my net profit from my profit and loss. So my net profit is a final figure from my profit and loss, 418,396. I'm going to add those, and then I'm going to take away my drawings. And again, we have a couple of changes done to drawings. So the most recent one was down towards the end here. So that drawings is 49,795. So I'm going to, the 1385396 less my drawings gives me 1335601. I'm going to add that to my creditors due after 1 year of 320 above, which gives me 1655601, and I can see now that my balance sheet balances. So that now is the question complete. Hopefully it was a help to you, and if it was, please subscribe and like the YouTube channel. Thank you.